All right, we're ready.
All right, so what I did for you guys, I kind of put it in a PowerPoint so you guys can reference this as a document, which I will share, but also you can reference the video and kind of go through it. And the key point of volume profile and anything that we teach is not for me to teach it and then it kind of goes away and you put it in your drawer and it's not put to use. If you're really not going to absorb the knowledge here and go apply it yourself, then, probably not the best way to learn something, especially in trading. Because a lot of people, especially new people, and I was talking to somebody in my family who seems to be a very rational person, a lot of people now want instant gratification, instant everything. And it's kind of the society, right, as a whole, that we just want instant everything. I want instant $200,000 salary. I want instant money. I want instant happiness. Everything has to be immediate, right? With trading, if you have that mindset, right, and you're not putting in the effort, you're not learning, and you're not applying it, you're not going to go far. You're going to get frustrated. And for most people, they're just going to keep bouncing from Discord to Discord. You're going to keep wasting money, and you're not going to learn much. And then you're going to say, "Hey, this is not for me," and you give up. Some of you guys that I've seen, you put your head down, you learn, and you're kind of compounding your account. But more so, you're learning the process where once your account's bigger, it just becomes kind of repeatable. And if you guys have like Douglas Trading, Mark Douglas Trading in the Zone. If you listen to the book, he talks about some people make it so easy when they trade, right? It becomes like a game. It's a money game, like a monopoly, and that's once you learn the process and you apply your knowledge and you keep applying and it becomes repeatable. That's how you makes it. That's how you make it look easy. And if you're not 100% committed, it will not come easy. That's pretty much simply put why some succeed and why most, like 90% of them fail. Is the 90%, they can't climb out of the hole because they lost money, they want quick recoveries, and it never happens. So with that being said, I will introduce you. Well, for some of you, you're familiar with this. Maybe you learn something new. Maybe you kind of refresh what you already know, and hopefully helps you down the road. While we're doing this session, hopefully you guys, all of you, have read and understand the date types because that will help you tremendously. And I'll reference those date types as much as I can, kind of give you the visual. But that is the two pieces are really, really important to understand when you're trading volume profile. And the volume profile itself is a date type, and you'll see that here shortly. So with that being said, what is volume profile? So many of you are used to seeing the volume bars on the x-axis, right? You guys see them on the bottom and they spike, and that tells you time and volume, right? It's not really telling you at what level was the highest volume, and that's what volume profile is. It's the horizontal volume profile that tells you at what price are we getting the volume, right? Even the volume profile has the buy and sell, but I don't really rely on it. I just look at the volume bars, the length, the setup as support and resistance levels. And as you guys know, all of the Discord that I preach and teach, we use POCs and something called virgin POCs, which is your untested POC. And we'll go into details what each one of them kind of means. The second point here is don't confuse volume profile with market profile. So market profile is how much the price stayed, meaning it measures time versus the volume at a certain level. So my question is, does the time move the price or does the volume move the price? So hopefully all of you understand the question, and it's the volume, right? I mean, just by price staying at a level forever, it's not going to move the price. It's just going to mean it stayed there for a long time. And time and volume together can mean that there is accumulation or distribution or a move potentially coming. But me personally, that's why I prefer volume profile over market profile, just because the volume moves the price, not the time. Time is a good indicator to look at the bigger picture, see where the major accumulation distributions are happening. But in terms of trading, volume profile is a true indicator that tells you at what point was it heavy, where the institutions are buying or selling. Hence why I use that, and many traders consider it to be a better analysis tool, as mentioned here. Okay, So the volume types, for the new people that you have in TradingView, and we'll kind of go over it. I'm going to cover in PowerPoint. We'll go over it in TradingView. You have the fixed range. This is pretty much, if you want to look at a specific period of time, you would go to fixed range profile in TradingView, and you would basically select, let's say you can do, most people use weekly, meaning you grab the beginning of the week. So for last week, you would grab 31st to 3rd, and you would look at the profile of the volume profile for those 4 days, because we had a day off on Memorial. You would look at it and see how it's structured, right? What kind of profile is it? Has the POC been kind of touched and rejected? And where's the price compared to the kind of value area, right? Whether it's value area high, stuck, or low, and where are the people taking profits? And so basically, that's your fixed range. You select the start and end point, and basically generates a volume profile. Visible range, as it kind of says itself, it's whatever is available on your screen, and you guys will see me. You'll see Catching Rockets use this, and I've seen it on a couple of people's charts where they're doing deeper analysis on a ticker, that they look at it and basically tells you a really, really big picture if you're using bigger candles, right? If you're using weekly candles and whatever you see on your screen, that's what it builds the volume profile off of. So that's your visible range. And this is the session volume. This is what we use most of the time. It's basically one session, right? It's a New York session that starts at 4:30 a.m. and it starts building the volume profile on equities from that time and then all the way until the close. This is what we use in TradingView. You use it on 30 minutes to kind of gauge the levels of the POCs. And then on TOS, we use 30-day, 30 minutes as well. Just the 30 days, the lookup period. In TradingView, you don't necessarily have the lookup period on the time frames, as you can scroll left and right. So hopefully this makes sense. How do you break this down? Visually. So this is your profile high from the left. I'm going to go to the down. Profile high means it's at what point is the highest traded price within a day. So basically, this is your day high, and then this, I don't know why it keeps switching here. And this is your profile low. Value area is really, really important to know, right? So in terms of value area, we use a specific number, and I'll cover that in the next slide. It's because of the standard deviations, right? It's your pure statistics model that many people use, not only myself. I've just learned to use it. It's your first standard deviation of the volume. Usually when something is stuck in the value area, whether it's between, upper side or bottom side, it means the market's imbalanced, that people are happy buying and selling within that area. And until one side is broken and it creates an imbalance, that's where you kind of start making your moves, right? It's hard to trade within the value area, but it's not necessarily impossible. You just have to understand when you're trading in a tight range, your profits have to be tighter as well. You're not going to get those trending days where you're kind of collecting and trimming. You're basically taking all of the plate on kind of taking all your profits at certain levels that you have. That's your value area high. Basically, it's the highest price within the value area of that 68%. And the value area low is just the opposite. It's the lowest price of the value area. And see in this volume profile that I'm using, it's highlighted with a different color here with the yellow where the value area is. Within this area, highest volume has been traded. And then the most important piece is the red lines that we call point of control, which is your POC short term. And I've not added here. I'll probably add it afterwards. We also have one piece called VPOC. I couldn't really put it on this picture. But basically, VPOC, Virgin POC, is the untested POC. And I'll give you some examples in a later slide so you guys can kind of remember it for newer people as well. Why do we use 61% as value area? Well, just look at your standard deviation, the bell curve, right? So this is your standard deviation. Negative 1 to 1 is your one standard deviation. So that's within your 68%. So if you're to kind of flip this, right, right here, what do you get? Here's your volume profile, right? And this is pretty much same as here. You guys see that? It's same. I'm just using the area in here to be the most important one. And when something goes out of this first standard deviation, well, most likely there's a high chance it goes to the second standard deviation and it hits there. and it gets out. So that's the reason why we use that, and hopefully now it makes visual sense on why we do that. And here you have the text. If you need to revisit it at some point, you can kind of read it word by word, but that's just the statistics and how it's been built around. So if you have the high volume nodes, and a lot of times you will hear me or somebody say skinny belly or heavy bellies, right? It's basically high volume nodes are where where really big portions of the volume are traded, right? It's not something that looks like it's peeking out and sticking out. That's what the low volume nodes are. That's where low volume nodes are used if you're shorting, and UK Wildcat uses it pretty good, and he created a model for himself where the day before he'll look up the low volume nodes on a previous day volume profile session, and he'll look to short as the price enters in those gaps and get out as it hits the bottom where the fat belly starts. So skinny belly is usually a speed up, and it usually flies through, right? So when you have a low volume node, or if you have a gap up in the market, there's a high potential you're going to have like a little gap of low volume nodes in there. And you'll see when you have different day types, like double distribution days, you will have two volume nodes, high volume nodes, and in between you're going to have low volume nodes. And on the double distro days, you usually have the price bouncing between the two value areas when they're searching for value. Okay. Next, as we kind of outlined in the agenda for this training, is there's different shape types. There's a D shape, P, lowercase b, and a B shape, right? And some of these have different variations. I did not want to get in all of this like today, but there's a long P, there's a short P, there's a long B, and a short B, lowercase b. And they're played differently, right? So they have a different dependency between each other, but I will not cover the dependencies between the shapes today. They'll most likely be next class that I do, because it gets a little bit complex, and I don't want to lose people from the basic to the most advanced. But just know that this will build on, that there is a long P, short B, and the dependency between each one of these. When people look at the longer picture of the volume profile sessions, they use that to determine the next move and how the market is structured. D-shaped volume. Would anyone take a guess? I mean, I want to make this more interactive than me just talking nonstop. What would the D shape look like? Like if you're to what does it mean? Like for you, if you saw a D-shaped volume profile, what do you think it would mean?
A day where the price consolidates.
Yeah, a lot of rangy type trading that day.
Yep, exactly. So, and if you think about the D-shaped volume profile, you usually will have a fairly quick high and a fairly quick low set, and that would resemble what type of trading day? This is for Drew. Let's see if he had trouble with the day types.
So a typical day?
It would be a typical day, correct. So just think about it. You have a D-shaped profile, you have the highs and the lows, and in between is just a typical day. And in between, this is a rule that I wrote it in How to Trade the D-shape. Usually what happens is in a typical days, if you grab the high and you grab the low, and it does not mean it's going to happen by 10 a.m. when we use the orbs. It could be the initial balance high set, at 10:01, which means the orbs would have missed it, right? Even if it's a single candle spike, that would be your initial balance high, or your for the typical day, your high of the day. You use that, and then you find the low of the day. If you draw your fibs, your 50% is gonna be POC 90% of the time. I'll give you guys a second to absorb what I said. Does everybody understand that?
Say it one more time, Shorty. Just I'll make sure I get it.
So on a D-shaped profile, your high to low, if you take your fibs, the 50% fib is going to be POC on that day 90% of the time.
Got it.
So, and this is important to know. Does anyone know why would that be important? Okay. Anyone want to take a stab? There's no wrong answer, guys. The more you get engaged, the better you're going to learn this. I promise.
Well, I guess you probably will see bounces or something. When you know where your 50% is, I guess you could play intraday setups on that as an extra comfortable with doing.
That is exactly right. That is perfect. So the reason why you want to do that is because if you go back to this, if you have a standard deviation on one, and I mean, this is your value area high, this is your value area low, or depending on how I flip it, right? In this case, this would be your high and low. And if this is your typical day here, the 50% here is going to be your POC. If you're shorting the tops, your exit should be the POC. If you're longing the bottoms, where should be your exit? Should be your POC, the 50%. So that's why it's important to understand the dynamics of the statistical dynamics of it and why you take profits there. And you basically just wait. You just wait for the retest on either side to go long or short, and you just keep trading and waiting. Okay, so that's D-shaped, and usually D-shaped is what I've gathered this, and this is me telling you. This is more kind of in my experience. This is where most people lose their accounts and trading options. And do you guys know why?
It's like whipsaw. I mean, by the time you get in, it reverses on you. By the time you get out, it's coming back to where you were playing in the first place.
Well, it's because people want to buy. They want to buy on the momentum. They don't want to buy a plain trade. And what happens is when they see a big candle and it goes to the initial balance high, when you should be shorting, they're getting in long. And then what happens is slowly ticks down, and that theta does the rest on 0 DTEs. And then they're like, oh man, let me add a little bit more, let me add a little bit more. And they exit where they should have gotten in, and then it spikes up, and then they would have made money. And that's why this D-shaped is a killer for accounts. If you see a D-shaped and you're not comfortable, you don't trade that day. You just take off or find a new ticker that has a different shape. So let's see the different shapes. P-shaped profiles, these tend to be your kind of like a trend base. And you'll see here, if you flip this and make it a B-shaped. So P-shaped usually indicates a trending day, means, as shown here, the price explodes from a level and it goes and it builds a P shape where most of the volume is concentrated on the top. If you're in a bullish market, this could mean it's going to continue once it breaks the value area high where they met and they had some rejection, meaning people came in and, usually responsive sellers, they will come in at these levels and they'll start kind of, selling the stock. Just think of yourself, if you had a product, if it's hitting somewhere, where the value area for your product is pretty high, you're probably going to sell it. You're going to say, hey, I can take my money here. And then if people find something value area low of this session profile, they're most likely going to buy it and drive it back up to the value area or POC high, and people will continue selling. Okay. If you're seeing this near the bottom, right, if you see the P shape near the bottom, what do you guys think would mean?
Driving the price down, shorts.
Well, it means it could be a trap for the shorts, and that we're going to be actually reversing from that area. Because if a lot of volume is accumulated on top of the profile, meaning in the value area high, that means it could be a reversal sign if it's at the bottom of the trend. And recently, and I'll show you guys once we get into the charts, SPY has a couple of these from the bottoms, from like 390s. And what it could mean is two things, right? That we truly reversed, and knowing fundamentals of the market right now, is it a reversal or a dead cat bounce or a short covering, right? It could be that it was a short covering because we still have the interest rates, and based on what you're hearing, it doesn't seem so confident that 50 basis points are going to cut it. They're probably going to surprise the market at some point and increase it by 1% or 75 basis points. So this, in other words, would be a short covering here rather than a reversal based on what the markets are telling us. So when you see a P-shaped on the bottom, just be careful because usually it means it left a lot of urgent POCs, and those tend to be retested, as you guys know, as they pull and gravitate. Every price gravitates towards the VPOC is really, really easy, especially when it's a short covering. You break one VPOC and you're just going to keep going down. Okay, B-shaped, as it kind of indicates here, and I try to, okay, I don't know why my mouse triggers the movements. It's basically,
yeah, if you click on the left side, you go back a slide. If you click on the right side, you go forward.
I just move it. I don't even click on it. I hate PowerPoint. So on the B shape, it's pretty much your opposite, right? And usually when you have a B shape, you know, that might signal that we're going to be kind of starting in a sell-off as well. If you're at the top and you see a B shape here, that might mean that somebody offloaded on that level, and basically you would short either the retest here or a volume cluster above it. Like if you're looking at this picture here, you would have like a nice little resistance area, and you short it there, and it's most likely going to go back to that POC because it's going to gravitate, and the sellers are going to get more aggressive on that level as well. If the most volume is accumulated towards the lows, right, while the price is closing at the lows that they near the POC, it's a strong statement that the market is not interested in profit taking, that it could be, you know, continuing for the more down move. And that's what you want to get out of that, is if there's a lot of volume accumulated here and it closes on the low of the day there, that there's a high chance that we're going to come back to this area, retest, and continue down. Does that make sense?
Yes. Yeah.
Okay. So here's the, you know, if you apply this trick on the bottom, and wherever you see the little shorty picture, that's just a rule of thumb that I use. And you'll see them on a couple of slides here. And this is me experience speaking more so than, you know, a book or something speaking. So the rule of thumb is if the price closes above the 50% fib of the day's range on a B shape, the trend continuation would be more debatable the next day. So if you take this level, right, you take the high and the low, and you draw your fib, and if the price closed above the 50% on the B shape, that trend down might not continue. Now you guys are seeing the 50% come into more shapes and the importance of it, right? So if it closes below the 50%, there's a high chance it's going to continue down. If it closes above the 50% on B shape, I would be kind of careful shorting that. Does that make sense? It's a simple rule, but you know, you should definitely look out for it.
That's awesome.
B-shaped. I mean, this is probably the easiest one to trade. And this is, if you guys are thinking about this on a day type, what would you guys call this? What type of day would this be?
Double distribution.
Yeah, this is your double distributions, and double distribution days are probably one of the easiest for new traders to trade. You have you have accumulation on the top, the price drops, and why do you guys think the price moves, right? So buyers and sellers find the value. They're like, okay, well, we're trading with this value. The price will not move until either supply or demand is increased. If the demand is increased from this area, that means price is going to go higher. As you know, more buyers are overcoming the suppliers, so it's going to go up. If the more suppliers win the race, is going to drop. So basically, you draw a rectangle. If there's kind of like a ranging looking type of a open or whatnot, you draw a box and you play it. They will look for the next area. I'm sorry.
I'm sorry, I was on mute. I was talking to my daughter. I thought I was on mute, man. My bad.
No worries. The next time, once they drop out of one area, it's natural for the stock market to look for the next area of where they're going to consolidate, right? So if they consolidated in this area, they went from this area, and you would look short where they basically found the previous area. If one area, initially, they found it and they dropped it from, what do you think is going to do when they retest it? Well, the first time is probably the easiest short because they're going to be looking to sell more at that level because it wasn't accepted in that range previously. Okay? And then one thing that you pay attention to, if you're going to have two nodes, high volume nodes, you want to see which one's kind of more aggressive, right? If the demand was more aggressive, it kind of makes it easier for you to play the calls off of that demand of that value or node versus the top one if it was a weak high. Weak high means it consolidated right below the resistance. A strong high would mean it came to top and it literally got an immediate reaction and got slapped. Okay. So that would be the difference. And B shapes usually are fairly easy to trade for new guys into the stock market.
What tells you which one is more aggressive? Is it the
P and B shapes are your aggressive ones. Those are usually indicating trend days.
okay? Thank you.
P and B shapes are gonna be, you know, they're gonna be, you're gonna get them, but it doesn't mean it's gonna be every time trend day when you see it because of the gap downs, right? The gap up and gap down. Usually, what you see sometimes is a gap down or a gap up, and then they consolidate the rest of the day. And people are like, well, what's going on? But even though it looked like a P shape, it's just the majority of the move happened before the market opened for trading. So how do we trade POCs? I'll kind of give you a couple of examples visually here, kind of give you some hints and tips on how to do it. So reactions on POCs are going to be pretty much guaranteed. You're going to get a reaction on a POC, whether price is above or breaks below it and retests. You're always going to get a reaction on these key levels, whether it's value area high or low. And it also depends what kind of trader you are. If you're a swing trader and you're looking at single day profile session, you cannot do that. You cannot trade swings off of one session profile. You have to look at maybe a week or 2 weeks worth of volume profiles and know their dependencies to start swinging based on volume profiles. If you're day trading, you usually want to have 2 days of POCs where you can compare to the previous one and the current developing volume profile. So that way you know where the previous level and support was, the fresh support and resistance areas, right? Here, I'll give you a kind of example for the VPOCs, right? If you guys, have not watched any videos on the VPOCs is just basically an untested POC. And the way I think about it is, if you have an airplane flying out from Paris, Paris is the POC. Until the airplane comes back to the Paris, it's still considered a VPOC. Once the airplane comes back and touches in Paris, you just remove the V, and that name of the POC is kind of back. It's a POC Paris again. We remove the virgin piece of it. Does that make sense? Is it a good example for newer guys? Does it add up in your head? Hopefully it does. We've been preaching this for a long time. So, and a lot of you intraday, when you're trading, I think you forget what it means support and resistance. Even if you look at 1 minute, I don't suggest it, but you look at 1 minute, 3 minutes, 5 minutes, you'll be able to find the areas of support and resistance where the price had a reaction. Usually those price reactions, if you kind of overlay the volume profile, will be value area high or low or POC or volume cluster, right? A high volume node, low volume node of any kind, whether it's a B, uppercase B or lowercase b, you will find the areas of those value area highs and lows, and price will react to them. So if you look at this example here, and this is from a book that I kind of recommended that you guys read it, and it's just a very good example, and you'll see that there's two pieces to it. If you have a POC, let's say that it's a blue line, and the price comes back to it, you see how we get a reaction once. Price goes up, hopefully you're taking profits, comes back, and you get another reaction. And then it breaks that, right? Support that was there, hit twice, and it breaks it, right? Now, what you expect is that this here is going to become resistance. It means the supply here was over too much for the buyers. They were selling so high that the buyers couldn't buy up all the ask, so they couldn't drive the next market price to be up. So what happens that they dip below? I personally do not short here. I wait for the retest of that level on the resistance now level, and you short it there, and the previous low here becomes your target. And this should be in your head every day when you wake up on how you should look at the market. Support, resistance, retest, short. Support and resistance, break the support, retest, go long. Okay? Does this make sense? And I want you to visualize it and remember it because we're going into the kind of like a next phase of this one.
Hey, I have a question on that, Shorty.
Mm-hmm.
If you see number 2 there, where it actually breaks the resistance,
Mm-hmm.
the third candle after that, actually, if you're looking at this real time, it wouldn't actually gone up to that blue line. So wouldn't that be considered a retest then?
You can, but remember, what kind of trader are you? Are you a scalper or are you a day trader? A scalper would get that, right? If I was Earth, I would take that.
Got you. So that's the
Usually,
difference.
exactly, that's the difference. Usually, a day trader would want to see a couple of highs and lows being created. Here you had, lower high. Here's a lower high again. Here's a lower high again. Here's a equal lows right here. If you think about it being made. So I would personally, the way I trade, I'm more of a day trader than a scalper. I wait for this to come back and then I short it, and I'm pretty much guaranteed to know where my profit is. Here, you can figure out your profit, but here I know my profit. That's the difference. Here you're going to be taking profits. Here I know it's probably going to go to the lows or very close to this imbalance created, so I can get out pretty much on this candle when it taps, and it would have been perfect here. I would get out and kind of close the trade. So that's the difference in the mindset of it. So now the second scenario, it's the same chart, guys. Same chart like this. It's just a couple of hours later. You guys see that rejection that we had, right? It came back. You would have gotten out on that level that we just talked about. Exit your short. And look now here. This means, does anyone know, if you read the book, these hits here, what does that mean in terms of the high? Is it a strong high or weak high here?
It's strong.
No, this is weak high. When the price is hitting level up top multiple times and not getting a strong rejection down or up from the support, that's considered a weak high. This weak high here means once it basically retests and it gets a little bit more, momentum, this is going to be broken. And here, look, we got in on that retest and you put it above the VIX here, you're still good for a trade. You made your money in a short. But look at this now. That previous week high got taken out here. Most people, momentum traders would get in on this trade, right, and put a stop loss probably right below this wick, which is okay, and they drive the price up. Or what most other retest traders do is they wait for the retest and you enter long here on the retest where the previous week high was and where the major kind of buyers showed up on the big candle here. You get in and you drive it long. Does this 1-2 step make sense for most people?
Yes.
Perfect. So how do you know what I just kind of talked about, strong or weak resistance support? So candle volume is probably your best friend. And then, candle formations, the pin bars, these are your, bearish, and then here are your bullish pin bars when they show on the bottom. Another thing that I use, if the candles are getting smaller as they approach support or resistance, indicates weakness and the profit takers exiting their position. So if you think about it here, right, you see here, candles got smaller, they're taking their money out, and some people still hoping, and then they dump them. They basically stop loss, hunt these people out. They got them out. But look here now, as you're approaching that resistance, it's not little candles anymore. This time it's big candles. It usually tells you that, you're most likely going to break this resistance now because it's a full force of buyers that are coming in because they bought it on the bottom. Now they're going to get another momentum once it breaks, certain patterns, different traders, double bottom, the neckline here. They reloaded and they drove the price higher. So, you have to think about what others trade and how it might impact your trade when you get in versus when you get out. So that's the candle sizes right here. The candles are getting smaller. And then strong high and low. So a strong high means it has an immediate rejection to the resistance, right? It taps the level. It doesn't really dance around. It 1-2 touches and it has a rejection to it, a reaction that's worth noting, and it creates an imbalance. A weak high means just what it had here, right? It hit it, but then it consolidated right at the resistance and then it came back down. So it wasn't an immediate rejection like here. It came back and it had an immediate rejection up. So that would be, what would this be, Drew? Would this be strong low or weak low?
Strong.
That's a strong low because there was an immediate rejection to that level or immediate reaction to that level. And you see when you came back again, this was another good entry to go long because you know last time they reacted really quick. And look, you could have driven that for long, really nice gains. So pin bar examples, right? And this is something you can look for, on any time frame. My favorite is when you find this on 15 minutes intraday. When you look for pin bars and you find this long wick with a small body on 15 minutes, and if it shorts, if it triggers a sell-off from there, the best thing you can do, and you can tell, if this happened, let's say happened at 9 a.m., look at the patience you had to have for your trade. You had to wait all day for this trade, guys. So, and sometimes that's what it takes, and that's what people don't have. They don't have the patience to wait for the trade to come in, to wait for shorting. And that's, the beauty of it. If this was your POC and you have the pin bar here, you wait. And remember something I mentioned last time when we talked. Count the number of candles it took to get to the low. 1, 2, 3, 4, 5. Now count how many candles it took to get up. Well, I'm not going to count them here, but if, there's probably 5 times as much candles getting to the price up than it did to go down. So that also tells you, that this is going to be basically a compression. It's compressing up. That means it's going to get another move down right off that resistance, and it's an easy short. And this works pretty much on all time frames, and it just depends on what kind of trader you are. A scalp per day swing. So you want to use that to your advantage when you see these, right? Add the POCs or value area highs or lows when pin bars are formed.
Man, I appreciate you pointing that out about the pin bars, because those used to trip me up. They would trip me up all the time because I really didn't know how to interpret that. I would see the spikes and all that kinds of stuff, and I knew, you had buyers trying to push and sellers trying to push it down. So those would kind of throw me off, getting in and getting out of trades and such like that, or knowing when to get in based on that. And so appreciate you pointing that out, man.
No, it's good. I mean, that's, trading is not about one strategy that works. It's about confluence on strategies and finding out. Volume profile is probably the best confluence point, hence we use VPOCs and POCs or the orbs, is to know where we can take and exit profits. And now you add the candle type, and it makes it so much easier to know, hey, I have a pin bar right here at the resistance. What do you think is going to happen? Well, usually this happens and you play the statistics. You get in this trade and you put your stop loss right above it, and that's a planned trade. And it means that you're in control, right? It means you took a trade, you know where your stop loss is, you get out if it breaks that level, and you stay in it as long as it stays below that level, and you watch the trade go. What most people do is, and why they lose money, is they don't know how to trade it, and they just get in, they don't have a plan, and then they start hoping that, oh, I'm long here. Let's say they got long here and they're hoping, and then they're like, okay, well, I'm going to add more long here because we're going to get a breakout, and boom, it goes against them because they don't understand how the stock market behaves. So that's why it's important, to understand this and, kind of combine it with everything else that we have. So, and I think volume profile being the key piece. So now I give you kind of, yep.
I was just asking, back on page 14, you have this same kind of candle. And I mean, it looks like where it break out, that would, I would think you would be selling it because it looks like a reversal candle.
This one right here, yeah, that's called a fake trap, right? So what they do here is they give you, so think about it, market makers and all these people are playing against you. It's a sum zero game in the options. For them, the goal is, what do you think most people did here when they saw this candle here? They most likely shorted the market, right? And if they shorted, they had a stop loss probably somewhere around this week high. And I agree, but there's one thing that contradicts that it's going to come back down. And what is it?
That massive green candle.
The massive green candle is telling you that this momentum is much stronger than the previous one. Look at the candles it took last time. 1, 2, 3, 4, 5, 6. Well, it took one candle to get to that resistance. Last time, it's, they accumulated a little bit more the second time it hit on the bottom. So there's a strong chance that you're going to break it. And you have 2 points telling you that. This was a weak high, and you got a massive candle. Unfortunately, we don't have the volume on the bottom here. But if this was a POC, if you're breaking this level with a massive candle, and it was a weak high previously, you should know, just from your experience that this might break, and you play the long on a retest.
Nice. Nice, man.
So D shape, how do you trade it, right? And this is your typical day. We know based on the knowledge that we have that, you have responsive buyers and responsive sellers in a typical day. There's no initiative buyers, initiative sellers. It's basically a ping pong. You go to the top and you short it, and that's why it's important to know there's, something I mentioned earlier, this becomes your bread and butter for profit. And most people that avoid this, they lose on typical days. You short the highs and you take profits at the POC or 50% orb and you get out. When it gets to the lows of it, you go long and you basically take money at your 50%. Can you guys visualize this as I speak? Because you should be trying to be like, okay, how does it look like? So if you think about this, and I'll show you examples on it, you would basically have a D profile, and it would have the high and the low, and 50% kind of right in the middle of the POC. Go long on the lows, go short on the highs, and get out in the middle. This one is fairly easy, but you have to be really, really risk and disciplined to trade it. And most people are not, so that's why they lose money on this one.
Hey, Shorty, it's a quick question. This volume profile, if I'm considering, it will be developing, right? At this, like.
Hold on, I keep losing you.
Sorry, Shorty. Is it clear now?
Yeah, it's much better now.
Yeah. So I'm asking, like, the volume profile is fixed, like when it happens in the past. But for the current day, if I am at like 11, the volume profile may start at a small letter B, but it may end up with D, right? At that point of time, do I need to consider the previous day's POC and VPOCs as a base?
That's correct. So if you're a day trader, that's what I mentioned earlier. If you're day trading, you can't solely use today's volume profile to trade. You have to use a day before plus today. If you're swing trading, you have to use multiple days. Usually 14 days is good enough, or 7 days to give you the structure of the market by looking on the day types and kind of the dependencies between them. And I'll hold a class on that next. But I just need everyone to absorb what volume profile is, and then we get into the dependency between days. So you can kind of read the market using volume profile. But yeah, good question. You want to use the day before, current day, kind of help you engage the prices. And if you're trading right at open with the volume profile, you're going to have a hard time because the volume hasn't been set. Hence, if you wait 30 minutes, it's probably the most volume that happens in the day is the first 30 minutes and the last 30 minutes. So the first 30 minutes will give you the resistance and supports, where the last 30 minutes will play and react.
Okay, thanks, Shorty.
Yep. So this one's fairly easy. Hopefully you guys, can visualize it in your head. We'll go through some examples. Easy one. P-shaped volumes, right? So if you look at the P-shaped volume profile, usually what happens is that you'll have a volume cluster. If you're trading it independently of it, a week or 2 weeks of data, there's a couple of ways to trade it. If if the P-shaped volume is occurring in an uptrend and you're expecting a continuation pattern, right? So the POC would be somewhere around here on a P-shape. You see that we had a volume cluster where we exploded from last time. And if you guys know another theory that I use, it's called imbalance, right? Some people call it SMP, smart money trading. The balance was created here, which happens to be the volume cluster on a P-shape. Usually what it means in terms of continuation pattern is the price is going to explode from this, where most of the buyers came in aggressively. And then you had some buyers here, whether they sold or added more. But once it revisits that cluster, that becomes an easy buy. So hopefully what I teach you with the indecision candles and the cluster here is now making a little bit more sense. This is where the price exploded from. Once it hits the POC and it comes back, this is not a bad entry to go long. You enter on the volume cluster of the P-shaped piece. You see you have a thin part, skinny belly. It kind of dumps through it right here, and you go long here. Where most people would look to short, you go long. Does that make sense? And this is directly from the book that I told you guys, The Trader Dale, right? Yes,
Yes.
dumpster fire. I give credit where it's due. Okay. B shape, guys, it's literally the same thing. Just flip it. Flip it in your head. If you have the POC on the bottom, right, and you're going to have a volume cluster somewhere on the top on the B shape. And it's easy to play as well. If you're, if this is happening on a downtrend, usually the morning high, the morning bounce, you'll get a bounce. It'll create a cluster. Next time you come to that cluster, let's say it's the 330 and you waited all day for it. When it comes, it's basically a high probable trade that you're going to come there and you're going to get your 20% on that trade because it's going to have a reaction off that cluster. Doesn't matter what kind of reaction, it'll have some kind of reaction where you can make 10 to 20% on that trade. So these two fairly easy to trade off of it. But if this is occurring in a downtrend day and you want to play the POCs, well, let the POCs wait for the retest and then continue shorting as well. This is intraday, 2-3 day POCs. You wait for the retest of the POC to the downside and you kind of short it from there. So if you're day trading, you look at the volume clusters for the day before to make sure that it supports where you're going to be shorting. If it has a skinny belly before and they ran through it, it could be that they're setting you a trap, for the intraday with a mini volume cluster. But if there's skinny belly here on the day before, you want to watch out and be quick to take your profits, whether it's short or long, if it doesn't support what you're trying to do. Good question, Tag. B trade, the uppercase B. So this is, like I said, this is probably the easiest one to trade. It's your double distribution day. You short on the top of the consolidation, and you go long on the bottoms when it consolidates or breaks higher out of that consolidation. And like I said, it's the best to draw the rectangles, and you can play the retest of it, or you can play the breakouts depending on what kind of trader you are. Does this so far make sense on the volume profiles and the knowledge you got? Because then we'll just kind of go look at it on the live trading. All right. So, and now this, this happens obviously every day on a session volume profile. So if you're not familiar, if you go under indicators, you go technicals, volume profile, there's your fix, there's your session volume, and there's your visible range. So what I'm showing you right now is session volume profile. So each day there's a volume profile that's being built, and you're able to kind of see the shapes now and hopefully recognize them and what they look like, right? So, you have a P shape, maybe double distribution day. This looks like to be probably, it looks elongated, B shape here. So here's almost like a double distribution day here. It looks like a P shape, long P shape. Here's your P shape here, B shape here. So it's kind of nice when you look at it and you understand what you're looking at, right? Most people, when they look at volume profile, they just see a bunch of volume candles and they don't understand the true meaning of it, right? So how do we use this in terms of, support and resistance, and how do you build that into your trading, right? So you guys know that we use orbs kind of religiously, but we added the volume profile because it really is the key in the trading, that if you don't have this, it becomes almost like you're trading blindly, honestly. So if you're going to be using this support and resistance model of the VPOCs and POCs, it's very simple, guys. You use the 30 minutes here, and let's say I mark up these POCs as as support and resistance. So here, what I was telling you earlier about what does the lowercase b indicate in a downtrend. This is a if you look at this profile here, this is a lowercase b, right? You guys see it? It's possible it's a reversal, but it also could be a short covering. Blue and yellow is your buying and selling on the volume profile. It's almost like the red and green on the bottom of your x-axis, and on y-axis it's the same thing. So if you look at this, right, it could be that it means that it's that the stock market is reversing out of this. You have to know, the the structure of the market where we are to know if this is a true reversal or if it's something that's kind of like a dead cat bounce or a short covering, and it might come back. So if you look here, we got the rally from it, and we never really came back to this price. What we know about, so far is that this is a virgin point of control, right? This is the Paris airport that the airplane never landed on this. So if this is the VPOC here, and you guys know that I like to draw my little area around it. So and then usually extend it. So now I'm looking not only at one session, right? Now I understand what each session means, but I'm looking at a little bit more data, right? I have 1, 2, 3, 4, 5, 6, 7, 8, 9, 10 days worth of data, and to the left, I'm sorry, you have a little bit more that you can use to gauge the market and know what the levels will be. So, for instance, here's the rejection right there at 417.5, which was almost a double XPOC here. Now I know that we are hitting some resistance levels here, and that we have some VPOC still above, right? So you have 427, almost double, and there's a strong supply here at 440, and then a natural rejection that happened at 430 level here. So now that I'm looking at this, I'm like, okay, well, we had a B-shaped profile from where we exploded. Then we had a P-shaped profile as well here, right? Which means earlier we said if you have a P shape, right, when it starts moving up, that it could be that it's a continuation pattern, right? So if I was looking one by one, once this POC, remember, it's going to consolidate in that value area high here and low, and it did, right? So if I was to kind of just focus on this area, I'll have to remove that. So if you look at this, for this day, this was the value area high and low. Now I'll just extend it to the next day as well. And look what happens, right? So once this area is broken, it continued higher. And how would you know where to take your money? Well, I mean, you had the volume profiles from the days before. And once it broke out of this area, you had that level. I mean, if you wanted to be really, risky, you broke that level. Let's say you trimmed some at 400, that's $4 move. Even if you added this one here, 401, it would be the levels that you can play, whether you're, day trading or scalping. These would be the levels that you kind of take note of, right? So here now, that this level pops from here, and it's another virgin POC at this level. So the 4573 is another VPOC that we have. I don't know why it does that. So this level becomes your VPOC, but then as you go on, you see how many VPOCs we have left? Usually the rule is if you have this many VPOCs, that means it's a short covering rally and it's not going to be sustained. It means you're going to come back quickly to all these levels. So let me do this. Here's another VPOC. So here's your VPOC. I'll delete these levels because they're not the latest. Here's your another VPOC here. And now, what do you guys think is happening here? Just based on what we've kind of talked about so far, what do you guys think is happening here?
Looks like we're going to dive back down.
Say it again. Both of you spoke at the same time.
I see that trend line that it broke down through.
We broke the trend line, but in terms of POCs, right? If we just look at POCs, we know where the VPOCs are. So, you had kind of like a double distribution day. You had a D day here. I don't know. Just looking at this day, I can't tell what this one would be. Kind of almost like a D-shaped POC as well here. Then you have a P shape here that happened, but there's something telling you here. We did not get the follow through on this P shape. You guys see this?
Yeah. Looks like accumulation to me.
But it looks like a distribution potentially happening. That's going to happen here. Last time we had a P shape here, right? If you look at it, we went from here, and within 3 days we accumulated and we broke it higher. So the only way you take this trade higher would be what? Right, Name?
Above
How do
that.
you take?
It breaks. Yeah, it breaks that POC that's from the
It
previous
needs
day.
to, yeah, it needs to break this 450 and 61 to break it, and you can expect that to go higher. And the value area high would be your first exit point, and between 417.5. You would look to get out of there on the trade till this breaks and retest and going higher. And here now you have a B, and this is called a short B, right? Usually short B means that there's some kind of trap being set up. So if you look here, right, I mean, who's messing with my colors again? So here's your, it looks like a bull flag when you think about the bigger picture. It looks like a bull flag, and it's consolidating right at that level of resistance. Would you guys call this to be a strong high or a weak high when it tapped here?
Strong.
Strong.
Yeah, it's a strong high. But let me give you another example when the strong high happened here. Same thing happened recently in the market. Does this look pretty identical here? It hit and it had a gap down. And let's see here. It hit and it had what?
Gap down.
Yep. So, and then you just kind of go back and you look. The same day the gap down happened, there was really, I mean, it triggered, I remember this day, it triggered really the sell-off in the market. I mean, it went from 430 all the way to 380 on the SPY. But this time, we hit that level, but we did not get a really strong follow through. We didn't break the low of that day where it started. So 407 would have been great to break. But you see here, when we hit that and we gapped down, we broke that previous low of that day here, right? And we were never able to close above it. So here, even though it might look like a trap that we're going to go down, there's a high chance that we're going to break this to the upside potentially and go. But we know the levels, right? So if you're going to be shorting this, you have the VPOC here at 405. If you wanted to short this below, then you just take the low of the day, 409.51. That would be your short entry, which lines up here with this POC at 410, probably a safer entry here on the low of the VAL. You take that, and then if it breaks the 415, you can go long on that. Or if it reclaims this POC, the previous day POC, reclaims that retest, then go long, then you have a level here to take money off of 412.90. And that's how you're combining your closer POCs to know your levels. But if this breaks this trend line, guys, all of these VPOCs, every single one is going to be hit. Like literally every one of them. And you see here, somebody brought it up. We broke this trend line here where we bounced from before. So if you look at this, you broke this trend line here, and if you're in an uptrend, you need to hold this for a little bit longer period of time. Here, you held it 1, 2, 3, 4, 5, 6 days, and then it broke, and then you came back and you're unable to kind of get over it. So if this here was your demand, there's a high potential that this is not creating a supply, and just pay attention to this cluster here. You see how many POCs were in that area before? 1, 2, 3, 4, 5, 6 in that area. And if we break that level, there's a high chance we go to 430. You break this level here, we're going to hit every single one of these. So we went from knowing what type of day it is on the POC, PBD shapes, and now kind of combining slowly, know your VPOCs, know your POCs, previous area of supply and congestion. And then, you zoom in on a single day. If you go on a single day, right, you will be able to know, okay, well, here's a P shape, and look at this. If this is a P shape, what is this here? You guys see this? Based on the PowerPoint, what is this called here in a P shape?
What's your volume cluster?
That is your volume cluster. So this right here is your volume cluster. So on a P shape, if this was a healthy uptrend, right? Even if it's not a bad trade to get in here and kind of go along off of this level. And you see here almost, you know, very close to perfect here. What happened to the price when they hit that volume cluster?
Retested.
I mean, it exploded from it, guys. I mean, if you can catch a move on SPY from 409 to 413, you just made a lot of money. So now, you know, if somebody is really risk averse, you want to short this on the bottom of this POC or below this cluster, because that's, you know, what Tag was asking earlier. How do you combine the data? Do I look at the data? Of course, I look at the data from the previous day. So here's my, you know, my clusters here. So you had a cluster here for shorting on the, well, I don't know if you want to call it, it's a weird looking profile. Let's call it, you know, double distribution day. So this was my top, and let's say this is my bottom, and the POC was right in the middle. You see, you know, when it came here, it had a reaction to the down. When it broke it, the POC went to the up, and those are your levels of profits. Remember the 50% orb? You play that level, and you can profit money here. And on this P shape here, same thing. You know, you have a POC support here from a couple of days before at 410, also psychological level, and you have a cluster from the day before of this POC. So this level here, naturally, if you look at it, right? Let me see. Trying to put it close as I can. Look how well the price reacts. So I have two POCs that I'm using the data for. Let's say I was like, okay, well, let me use a little bit more data. Watch this now. Where does the price reject? And there's something here I just want to point out, and hopefully somebody picks it up before I do. What kind of candles are forming at the resistance here of the 3-day POC?
Pin bars.
And let's just go back. Let's go back to our example and look at what this happens. Pin bar into the supply, and you get, this is your POC. I said if you have a pin bar at top of the POC or on the bottom, you short it. If you enter the short here, right, you should know where your targets are. How would you know where your targets are? Well, I mean, you have a POC. The closest POC from the base that you're looking at is 410.08. So if you took it here, look at that 410 level. Beautiful. It hit perfectly. And then another thing, you had a little cluster here, right? If you mark your level here at 411.56, not a bad spot to take something off, right? If you took it at 412.83, if you get a $1.30 move on SPY, guys, and you catch all of it, I promise that's probably 100% trade. And that's how you can combine the POC of the previous to the current and the 2 days before that. You're looking at this and you're like, okay, well, we have the support resistance, you have a pin bar. Okay, if I short here, my first exit should be here. Then if I know that, then the second exit can be here. And, you know, just looking at this, we draw this right here. And how would that work? Look, if I took a short here, I mean, and it tapped almost perfectly on this candle here. Does that make sense?
Yes.
Okay, so POC, if you look at the volume profile, let me not delete this because that was actually pretty nice. So if you look at this POC here, which was, I believe that was Thursday. If you look at the Thursday POC, this red line here means the highest volume was traded here. And it happens to be a P shape. So usually when this breaks, remember when, you know, the high breaks of that, you know, if you're looking at this here, if you wanted to trade this, this was your zone that it was in. Once the breaks, it's going to go higher, right? And then here it had kind of almost like a strong high that it hit and came back down. But your POC, the highest volume traded, was here. So now if you look at, did the price ever come back to this level? If I was to put this level here, did the price ever come back to revisit this level?
No.
So think of the example on the pairs, right? Where was it? Somewhere here. Forgot where I put it. That's right here. So think of this example, right? So if this is our POC here, this is our airport right here, and the airplane flew away from it. Well, it hasn't landed back in pairs. This means that this now here is what?
Virgin.
Yeah, this is a virgin pairs. This is the airport where the stock will eventually drive the price towards. And usually what it means, if you look at your compression here, this is a compression down, right? And you have a nice triangle being formed. So if you look at this, I mean, it looks pretty nice, right? You have almost like a bear pennant between the 2 days, right? So if you look here, this looks like a pretty nice bear pennant on 3 minutes, right?
Yep.
But then let's look at multi-time frame analysis. What does it look like now?
Bull pennant.
It looks like a bull pennant. So you have a bear pennant on a smaller time frame, and a bull pennant on a higher time frame. And then, I mean, I hate to do this right now in the middle of this, but what does it look like now?
Bear flag.
Bear flag.
Yeah, stop it. This is your bear pennant on a bigger time frame, right? You have a flagpole right here, and then you have, if you go from here to here, most people would probably go kind of draw an ascending triangle. No, I'm sorry, damn it, you have a rising wedge being built here. There's no ascending triangle, guys, here.
Oh, that's an ascending triangle.
Definitely not. You got me though. You got into my head. But does this make sense so far? I mean, I want to make sure it's clear and you can connect it in your head. Stop it, dumpster. I'm gonna block you.
Yes.
Okay. Okay, good. Because I really need you guys to start picking up. When you look at this, this should be enough for you to make some trades in a day. This should be, like, this screen alone should be plenty for me to take day trades right here. You look at it, okay, well, here I had kind of like a P-shape, balanced day, had a trending day. When they broke the previous value area high, look what happened. You guys see what happens here? The value area high is the highlighted blue and yellow. Look here, just pay attention. So this is my area here. I'm gonna try to draw a straight line as much as I can. Okay, so watch what happens when it breaks out of this value area high, and watch now. This is just beautiful. I just love it. And it has a POC from a balanced day here. You guys see how beautiful this works? It broke the value area high. It rejected that POC. And that's how you build a story for yourself and you believe your story. It hits the POC, comes back for the value area high, and then just literally exploded. And then you're like, okay, well, where do I take the money off? Well, what about this? If you took it here on a retest, let's say you know that this might be the first target, you trim some here, and then you have the value area high right here, and look where it rejects. Look at this. Retest of the value area from the previous day high, have the POC first trim, value area high of 2 days ago, and look, perfect entries, exit, just looking at 3 days. Does that make sense?
Yep.
And I'm just 1, 2, 3, 4, 5 days, guys. I'm just dissecting 5 days of volume profiles, and everything that I talked about in PowerPoint is here. Is literally here. Almost every single day is here. We have, call it double distro here, regular balance, P and B. This is just a weird uppercase B shape, so not the best, but call it B shape here. For P, could you use this as supply and B as demand? You can, but you just have to know where we are in terms of uptrend or downtrend. If the lowercase b shows up in a downtrend, right, it could signify, it could mean that we're going to continue as long as the 50% orb It's not closing above that. If it closes below that, that means continuation. It means it could bleed tomorrow again. If it closes above it, it could mean a short covering rally is coming, and that is going to convert that bottom into being a demand. If a lowercase b is showing up on an uptrend, it means that the sellers are trying to get out, right? So if you're looking at this, it could mean like this one here, the last bit of sellers are trying to get out here. And if we lose that level right here that we talked about, 409, I mean, I'm telling you guys, believe me, this is going to be quick. This is going to be super quick if we lose this level here. It's just going to dump. It's literally going to go through every single, and you can play every single level for shorting bear flags here on this level here. So it just depends where it is in time. And in the next class, I will teach you a little bit more complicated structure of the volume profile. There's a lot of rules in between, this and everything that happened in between. It could be explained logically between volume profiles and the type of days we had. You can basically determine what they're doing or planning to do based on the volume profile structure of each day. What other questions you guys got? Did this class help anyone learn something new that you haven't known, or kind of reinforce something you did know and maybe surprise you with like how to use it? Did anyone pick any of the knowledge up?
Both for me.
Oh yeah.
Yes.
Oh yeah, man.
So the key, guys, and I can't do it for you. And I trade the way I trade. Earth trades. Drew trades the way they. You have to look at this and be like, what is my personality and how do I trade? For you as an individual person, you have to kind of cater it to yourself and see, hey, how do I apply this to my trading style? I'm more of a day trader than a scalper. I don't mind scalping, you guys, when it's choppy. You hear me, like even Friday, I'm in and out, and split second sometimes. But if I have a clear picture where stuff is going, then you can kind of day trade and wait until it hits your level, you get out and call it a day. And those are the best stress-free trades. For me, scalping sometimes can be stressful because a single candle can stop you out, right? And it stopped me out like 3 times on Friday because it was just so choppy at the end that there was no point in me even trying to trade it. But it was just fun, right? I lost $200 on those trades with the stop loss. And the only thing, this is big what I'm about to tell you, any strategy that we use right now is not perfect. VPOX, volume profile, or whatever the hell you got, none of these are perfect. The only thing that you should make perfect is what?
Risk.
Your risk needs to be flawless. It needs to be fucking perfect to a T. You said you're getting out here, you get out there. And you executed a bad trade, but to your rules and your laws of your trading. And that, when you put it in a journal, I exited, took my 10% stop loss, I promise it builds confidence. And in this Discord, it's required that you journal, because I promise when you go back and you look at the journal, it will make more sense why you're doing bad. I mean, doing the same shit over and over and expecting a different result, there's a name for it.
Insanity.
Yeah, it's true insanity. And for a lot of traders that, I see you guys coming in a Discord, and honestly, I do not care how many people are in the Discord. I care how many people I can help. But when I see a person come in the Discord and they're like, okay, well, I was here for a month and I didn't do anything. Well, my first question would be, if I was to kind of talk to them, did you drop all the knowledge that you had before, the baggage that you learned somewhere else and it didn't work? Obviously, you came in a Discord. You didn't come in a Discord because you know it. You came in a Discord because you don't. The first thing you have to do is you have to drop what you know to accept the new knowledge, right? If you take 2 hands, literally put them next to each other, try to give one hand from one hand to another. It's simple. The hand that's giving has to open up, but the hand that's receiving has to do what? It has to open up too. And it's same with your mind and your brain, right? I mean, I'm giving you something, I'm opening up my hand, but most of you guys here are, some of the guys, not say most, that come in for a month, they have their hand closed. and they want instant money to grow. I mean, honestly, I give up on those people quickly too because they give up on themselves. On some people that I push through and I know who they are, I try to explain this numerous times. Like, this is how it works. It's not gonna be overnight. You cannot pick this knowledge that I gave you and apply it tomorrow. There's no way, guys. You
Shorty,
have to look at it and apply it, learn it, see how it reacts. Does it make sense with your strategy? Backtest it.
Shorty, put it this way. Before I got here, the only thing I knew was MACD and RSI. That was it.
And do you see me using any of those? Ever?
Nope. Nope.
I don't have a single lagging indicator, guys, on my chart. I don't use moving averages. I don't use, if it works for you, use it. I'm not saying it's bad. I just like to know that the volume and the price are the only things that make sense to me. And until you learn how to trade on a naked chart on price like this, if you look at this, right, and you're able to decipher what's going on, then it'll start making sense to you. By the time I add RSI, MACD, and I don't even know all of them, stochastics and all of that, sure, you can definitely get some responses to it, right? You can definitely trade it, but that doesn't mean that everybody can do it, right? Understanding the price action, understanding the volume, understanding the area of resistance and support, I promise will change the way you trade. It will make you a much better trader. At the end of the day, let's say let's just say you're doing, you took a couple of trades and you're doing bad. Simply just remove everything. Remove everything, make your chart and setup as pretty as mine, and just mark your levels. If you look at this, here's, recent highs right here. I would say, this area here is a strong high. This would be my resistance. Take everything off and just do this. Don't even use trading volume profile till you get better at it. You have this. There's another resistance right here. It's a fairly nice one. So if I was to trade this, this would be my concept right here. If I was to trade this right here, it would be once we break this level right here. Once we break this level here, what do you guys think I would do here?
Alone.
Wait for retest.
I would go here, wait for a retest, because most likely what would happen, I was waiting for somebody. Once this breaks, I showed you earlier on the POC on SPY and the value area high. You guys remember this moments ago? There was your value area high. There was your POC. The price had level where you can reject and plan the retest on that level. Look what it did. It went, reject, value area retest, and went higher. So now same thing here. You have something where it can reject just off a naked chart, right? You have a break here, and you guys know I don't like to play the breaks when there's not enough meat. For me, personally, there's not enough meat here for me to take this trade. Unless I am a scalper, yes. Me, personally, Shorty, I don't do it. I don't take this. There's just not enough meat for me, and I don't want it. So now, if I was to take this, most likely what would happen on intraday level is it would go here, and then the shorty comes in on this level here. And if this never happens, so what? It's not going to happen. I'm not going to be in the trade. I'm okay with that. If the market did something else and it's unpredictable, but I would be planning this trade here. If I took this trade, then you just know your levels, right? This is a long position. You're taking a level from here, and this would be my first. And then you kind of go here and you set it up where it's, let's say this would be, and this is my risk profile on it. And you just simplify. You have to plan your trades, right? The key is to plan. Then something that we learned about, the imbalances, right? And the indecision candles. Well, we have an indecision candle here. And look what happens when it comes back to it. Another pin bar, another pop. I would definitely play that and take my 10, 20%. Comes back, you can play it again. It's making higher low, right? Here it goes, higher, lower low, higher low, higher low. So we're kind of consolidating in a descending triangle here, but we can play the breakouts of it. Or if it breaks the bottom, right here, if it breaks that level, there's a strong chance that we're going to kind of break this and reject. And if you're not able to break this level, this is also a good spot for what? Right here. If you see from earlier when being asked, how do you know what's happening there? Well, another thing you could do here is what?
Short.
Shorty.
You could short it because this could mean it's a trap here. Look how many candles it's taking to get to this price level. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12 candles, 5 minutes, an hour, 60 minutes to get down. How many candles did it take to drop? 1, 2. So this is what's in my brain. I'm giving you guys a brain dump of everything that literally, it's almost like a machine. It processes in my head. I see it. Big 2 red candles going up 7. It's a compulsion move here. It's kind of getting compressed. And usually what that would mean is that you're going to look for some kind of area of resistance here. And look, now it would make sense because there's an indecision candle where it popped from last time. And if this is not a good level, then if it breaks above it, I'll wait. If I see candles getting weaker and I see a rejection candle, I'll take the break of that candle and go down. And that's literally how you can trade this. And we just put a plan in 10 minutes. Yes, you could play 12-5-9-6, the break of that, but I will also play the retest of that. I'm more of a retest than a breakout trader, so that's my personality. And you're able to do this pretty much on every stock, guys, that you have, right? So let's see, I'm trying to find some stocks that I don't have charts for. And same thing on 45 minutes, same thing on any time frame that you have. Just remove everything you got. And why is this not hiding? Oh, I have 2 of them. Huh? And 45 minutes, 65 minutes, those are probably good, for more of a swing, right? So if you look at this, you're looking at swing levels on the chart. And here, this one, I don't even know what this is, but I just know the ticker. Here's, nice indecision candle. They had a gap down. There's another demand being created here with the imbalance. So if you're able to break this liquidity right here that they created, let's say they break this liquidity here, there's a strong chance, guys, below this low right here, that it's going to do what? It's going to go back to the 479. So you can short it here. And then you should probably reverse at some point and grab some calls and play a quick call strategy on this and get the bounce of 20% and get out. And just think about it. All you have to do is grow your account 5% for 100 days, guys. Put that in your head. You don't need million. You need 5% a day for 100 days to make 150K from $1,000. When you put it so easy, right? It's like mind blowing, right? I just need 100 days to make 150K. But the reason why we don't is because we're humans. We're greedy. You want more than you can handle, and then you lose it all. And it's the same with the casino. You go to casino first day, you get lucky, and then you end up calling your wife if you're without her there and saying, "Hey, can you send me money or do something for me?"
That's funny, Shorty. That's funny, man.
Well, typical behavior of a humans, because humans, and especially now with the social media, guys, we are a simple program. Like they figured it out where they can literally make us do stuff. And I work in a company that uses we use the data with 95% accuracy to know what the next move in terms of shopper's mind.
Yeah, Walmart does that. Not to get off subject, but Walmart especially does that.
And we do the data for Walmart. So,
well, there you go. That's hilarious.
So, and just think about it in trading, how much information is available in trading. And they also have an upper hand, like a dealer, right? I mean, they have a better information than a dealer at a casino because they see the bid, the ask. They also see, right, the delta neutral positions. They see the OI contracts coming down or up. We don't. We see the next day. So everything is against you. And then on top of that, they have the dark pool levels. So for people that think, oh, I can catch 1,000% moves every day, the odds are stacked against you. You have no business waiting for 1,000% gainer or a single trade to change your life. Let the little trades add up and change your life. Once you understand that, I promise you, you will grow as a trader every day. Take your profits, take notes, take profits, take profits, take profits, and then you'll see your account grow. Irv started his account with $800 3 years back. And I'm not going to disclose how much it is right now, but let's just say that he's been making 10, 15K as well a day since.
Man, that's
And when you put that in perspective, you know, it's a big, big change, right? So I mean, just think about it. Here, I'll just open an Excel, do it for you guys real quick. One second here. One second, let me just. Trying to hide something. Okay, well, for some reason it's not working. All right. So let's just say the starting balance. Let's say, what do you guys want? What do you guys want to start off with? Just put this.
500 bucks.
Let's say you start $500, right? And day one. Now let's say you want to do this challenge. Let's not call it a challenge. I don't see this as challenge. I see this more as an opportunity than a challenge. What's the compounding growth you want per day?
2%.
5%.
5% is tough, guys. I'm telling you, 5%. Like I don't get 5%. Like, 2% sounds probably reasonable.
I'm good with 2.
2. Yeah, that's 2.
Okay, so what you do is here you take this, and what I typically do is I'll lock this in. Okay, so day one you would have what? $510. Then you take the same thing. Let me just kind of copy it right here. And let's just say we're gonna drag this bad boy down. I'm just gonna format it so you guys can see it. The key is that you guys get comfortable taking profits of 5%, 10% of your account daily. And they got stuck somewhere. All right. So this is your $500. On day 45, you would have doubled and more your account. So if you just keep going this, let's say you do this for 265 days, or let's say 260 days that are in trading year. Oh.
Wow.
That's wild.
Now you guys see, in 1 year, if you're disciplined and you stick to your rules every day, you're telling me that $10 is not important? Here a little bit more, a little bit more. Well, by the time you break that 100, watch now how it kind of goes. 36, from 15 days to 48, and then it starts doubling. Look at that.
That's crazy.
And that's what people don't understand. And the crazier part, what most people don't understand, is if you take 1 penny, right? You take this and you double it 30 days. If you just take 1 penny and double it for 30 days, do you know what happens?
Be a millionaire in 30 days. What's going on, dog?
You see what happened, guys? In 30 days, you took a penny and you doubled it every single day. 30 days, 5.4 million. And this setup here is not possible. This is not possible. This one on the left is what you should aim for. I'll just change this amount. Let's say you take 5,000. Well, 5,000 by day 100 is going to be a lot. 36. Is that? I mean, it's just mind blowing, right? You change this to be, your 5%er, and now you see how crazy it becomes to have 5%. On day 100, you would be sitting at $660,000. That's why, realistic goals, what, Drew added on the list of rules that I have, you do 1%, I mean, it's not bad. By the time you finish the year, look at this, 5,000, it'd be 63K. Well, then, let's say you start a year off, and let's say you start this again, instead of 63K, you're like, man, I'm gonna start it with 25,000, and you do the 1% for after a year. Look at this, guys. I mean, this is how you grow wealth. There's no other way. Then you take 100K, and then you do the same thing over and over, and you just keep repeating it, and that's how you become wealth. You grow wealth, not magically by. And look at this. Once you have 100K, your life changes. When you have 100K and you can repeat the process, watch now, a full year of 100K, what it does at 1%. Hopefully you guys are getting my message. Compound your account. I don't care what others are doing, their profits are posting. I'm telling you, 100K at 1% daily, you're going to be a millionaire in a year if you stick to your rules. But to do that, you need a process and repeatable profits and rules and discipline, and more so risk manager than a profit manager. If you know your risk, then it's easy to do that. So hopefully, the class, the session, the reiteration of volume profile, along with what we do, makes sense. Tonight we'll do a watch list. We'll prepare for the week. We'll see how the futures open, and then we'll go from there. Because I think, once you have the levels and you have a plan for 4 tickers, you don't need more than, guys, I only trade probably actively 3-4 tickers for me. If one's not working, I switch to Tesla. If Tesla's not, Amazon, AMD, SPX, and SPY, and Q sometimes. So max 5-6 tickers. And if you're switching between 150 tickers, you don't know the personality of the stock. You lose the levels. You don't know what they did, how they will react, what they will do, or plan ahead what they're doing.
Yep, I'm sticking with SPY for right now.
No, and if you're making money in SPY, you just keep making money in SPY. Who cares what it is, as long as the P&L is growing.
Shorty, will you share this PowerPoint? Will it be available in the Discord somewhere as the resources section somewhere?
Yeah, I'll upload it right now after this session. I'll put it up for us.
Okay, thanks, Shorty.
Yep. All right, guys. Well, if you don't have any questions, we're almost 2 hours in, and then tonight we'll do a watch list probably 9:30. From 9:30, we'll probably spend an hour and then see, how certain stocks are shaping up. The key levels. We'll start weeklies, dailies, and then we'll set up the watch list for the week. And then we'll probably, depending on how the market reacts to them, we'll kind of update it on the week and see if we need a watch list of what's available for us. But think about it. 1 trade a day, you can do 1%. That should be your mindset. You don't need You know, we had a guy on Friday. He was up $500 on Tesla, and then he overtraded. You do not fucking overtrade. You don't give them the money back. Why give? Go make $500 somewhere today at 95 degrees.
Yeah.
Yeah, go fucking do the work. Like, I have guys coming up this Wednesday to do the grass in my backyard, and they're like, yeah, $2,000 for all this work. And I'm like, yeah, no problem, man. You got it. Because I'm not going to take the fucking shovels and do that for 8 hours. And I'm not built for it, you know, and I'm built to click and make money. I did build a fucking fire pit dumpster. Stop fucking being annoying. Sequence, block him if you're there. I'll send you a picture. All right, guys. Well, hopefully you guys learned something. I'll post a PowerPoint, review it, look at the levels that we got, look at the concepts, apply it, set it up. And the best thing you can do, guys, is post a damn chart in the main chat. Ask for feedback from other people. What do you guys think? This is my idea. This is what I do. And then just ask for feedback. Like if you look at your journal and what you've done before hasn't worked and we have something new for you, open your hand, open your brain, and apply that new knowledge and erase the old knowledge so you can learn. If you don't do that, nobody, Shorty nor nobody can help you. Even Jim Cramer would not agree on you.
Shorty, I have a quick question if you don't mind.
Yeah, please go.
So with Ashi candles, they have indecision candles with Ashi candles, correct?
Oh yeah. So here's Ashi's, right? Here's an Ashi indecision candle right here. Oh, I meant to grab that. So come on. Why is it not deleting? So if you look at Ashi, here's Ashi indecision candle, right? It's a little bit bigger. Same thing.
That's been helping me out a lot lately with the Ashi candle, indecision candles.
Ashi candles are probably the best for people that are new because they're momentum candles. You guys know that. They use the previous day candle close and open to calculate where the next candle is. And as Ashi candles get smaller at somewhere, as they get smaller, look here. This is such a good example here. Look at this consolidation right here. Here. Look at the candles. They're big. They got smaller inside bar. So if it breaks this bar, some people play inside strategy. That's fine. I don't mind it because there's no indicators, just price action. But then once you break this high, look what happened. It went up. Then it had this zone here. And the same thing. It's just a little bit short hit. And look what happens now. Remember that example? I got to bring it up.
Sorry, I didn't mean to do all that.
No, it's good. It's just you brought up a point, right? So look here. Remember this picture here? How does this look identical in terms of price action? So you have the resistance, and look what it did. It came back, and did what?
Retested and went up.
Retested and went up, and you knew where to take money off because this should have been your profit. And look what happens. 479, 504. If you planned it, it's an easy trade, very easy trade. And it's a stress-free trade, guys. And even if you don't like that level, then just use your candles and let them be a break of it to get out. Once it broke here, you could have gotten here. I mean, it's just so simple once you know and you plan it. When you're reacting and you're getting in on somebody else's ideas, you will not succeed at this. Hence, Dumpster calls it a alert group. I don't alert, guys. I gave you a shop trade just to kind of give you an idea on how I take swings. But, I mean, the shop swing went over 150%. And I will swing only when there's a lot of confidence that my money is not going to be at risk. Once you grow an account bigger, you should be more riskier because you have a bigger amount. You don't want to build an empire slowly and then be a bad risk manager. And happens what? You have to start from the bottom. You have to build a castle from the bottom. I don't want to build a castle from the bottom. Right? I built it, and I don't want to destroy it so I can redo it again. So that's why it's important that your discipline and risk management actually gets stricter as you grow more. Because what people tend to do more, hey, I have more, let me take size up. You do not size up. You still repeat the same concept. I only played 5 contracts of shop, which was, I think it was $6,700 on the 400 calls, and I spent, I think, $27,000 on the January 2023 calls. So I was 30K in a position that was not a large sum of my portfolio, but for me, I could sleep at night, right? It wasn't something that, I was like, oh my God, I'm gonna lose 30. No, I was willing to lose portion of that 30,000. I was willing to lose about $6,000 off of that and be okay with that. But I never lost $6,000. I made double pretty much on that money, and I'm out of it. And that's how you have to think. Everything else that people are telling you in discourse and this and that, I see it, guys. I see it too. And I'm not saying there's no good traders. By no means am I a good trader or the best trader. I'm just a profitable trader. And, my strategy and ideas work. And some people that kind of live off people charging them $300 a month. Obviously, I don't charge you $300 a month, nor do we make 150K a month as a group, nor do I care if I make it. I honestly I'm not even profitable on the business side of the Discord. So for me, it's not for me to grow, and from you guys, if I can help you and one day you can say, yeah, how did you do it? Yeah, there was a Shorty, and that's what will make me happy, is seeing you guys grow and become independent, more so than me making, 400K a month off of your group and buying a Lambo and driving. I still don't have a Lambo or drive it. Until 2 years ago, and I have friends in this Discord, I drove a 2008 Nissan Versa. So if that tells you anything, I don't care for those things, guys.
You invest your money the right way.
Well, but I do travel a lot.
Yeah, exactly.
So, and once you start doing these things and you travel and you see people in need and you help them, I promise your inner happiness goes through the roof. Your life becomes settled. You become a better person. And if you're not gonna leave it. If you're not going to be a good person, then you should not be on this fucking earth. That's simple as I see it.
Shorty, I want to appreciate you for saying that, because that's one of the things that I avidly believe personally, is that, you don't just get this kind of gift, blessing, if for just to hold. You never build a bigger barn. You always let your barn be a conduit, a pass through, and it keeps your barn filled all the time.
Exactly. And that's, I don't really care what religion you believe in and, what you don't believe in. Just be a good person, man. Help the guy next to you. If you can't help him, don't make it harder. That's my style. If I can't help you, my life, I will not make it harder. My goal is to help people, remember it, and if they can't, if you're not willing to help yourself, and I tried my best to help you, well, then I'm sorry. I did my part. Maybe you didn't do yours, but that's okay. Maybe somebody else there will also help you. So that's fine as well.
All I gotta say, man, is that even if I was to blow my account 100 times, I would not leave here. Not that I want to, not that I'm going to, but even if I was to blow it 100 times, I wouldn't leave here because of the way I feel here in this Discord. You guys lead by example, man, and that's what it's all about. With the little bit that I have, I share with other people, man, and I'm always, I'm in recovery, so I'm always carrying the message to others, and that is I can't describe the feeling that you get when you get out of a rehab after you've carried the message to another person that's suffering.
It's honestly the only thing that makes you happy. At the end of the day, when you pass something on and it makes that person stronger or better, and it's the same thing in the business world, guys. I'm still in the business world, right? I work with big boys in a company, and you see the people as they get to the top, they become more evil. They become, I call it the narcissistic idiots, right? They only care for themselves. They don't care for the guy that's below that they're going to fire tomorrow, and especially now, guys, it's going to get so bad in the U.S. market worldwide. The firings with the supply workers. I gave you guys, 2 weeks ago, the cycle of what's going to happen. The company's going to start firing now a lot. You saw Tesla started firing 10%. I mean, I don't know. Hold on, but didn't Tesla just say that they had record numbers 3 weeks or 4 weeks ago? Didn't he send an email thanking the employees? Elon Musk sent an email thanking his employees for the record break on number of cars delivered, right? But then a month later, you're telling the people that we are overstaffed. Are you really overstaffed, or are the high salaries hitting your margin and your next results are not going to be as good, so you're trying to recover that? Well, I know they are because I see it from my own company. I see the financials really firsthand. And all of them do. It's about to be a cycle in the whole United States where they literally are hiring people to create salaries smaller. Because when you have 2 employees that are applying for a job and 10 companies fighting for those two guys can demand a lot salary. But when you have 1,000 people applying for a job, now the company's in power and they can say, hey, well, we have another 40 people apply for this role. I can give you 100 if you want it or not. Then the next guy was like, yeah, I'll take 100. And that's supply and demand again. Everything's supply and demand. But right now, they're trying to flip the tables. And they started this about 2 months back when they said, come back to work. And people started saying no. Then the rule came out, if you're not coming back to work, we'll fire you. Now they're using that to start firing people in most states that, allow that. So it's just a cycle, guys. It comes and it goes and it repeats itself literally. Constantly, it's repeating, right? And the only way to kill inflation, do you guys know how? Any economists or that like to read about economy? How do you? Well, the only way to kill inflation is to take away the money from the people. I know you guys don't believe this, but just go research it and study it. If there's no demand or buying, and if you don't have the money to buy, well, what's the supplier of the stuff going to do if you don't have the money to buy it? Well, they have to drop the price, guys. The only way to drop the price, if you have the goods, especially perishable goods, that nobody's buying. There was a study recently, and I'll find it and send you a link, in South America where the eggs somewhere like popped literally to be like 6 times the price for a piece of egg, one egg. Well, the people together said nobody fucking buy eggs for a week. Well, if you're a farmer and you produce, let's say, 5,000 eggs a day, you have that many chickens. Do you have the inventory and you have the storage to store that many eggs if it's not being bought? Probably not. So what you're going to be forced to do, you're going to be forced to sell it back at a lower price in order to offload it. So the people just don't know the power they have, and they freak out, and they're controlled by the bigger boys, the big brother, and they drive them. And it's the same with the stock market. Same concept applies to the stock market, supply and demand, and how it works. And just watch now, and by Q3, economy is going to start booming again. And there's, my ideas behind it is, if you think about it, right, the cycle is going to be lay off the people, and what do companies get for in Q4? Well, retail gets ready for Christmas, Thanksgiving, and all those seasons. They're going to start hiring people back up. Well, you have to understand what caused the inflation, right? Government spending, but then there was a big piece where the government fucked up and they didn't want to admit it. We had people and heard stories where people took layoffs or, unemployment, and they made more money than they did when they were employed, right? Well, if that
happened, yes.
So think about the economics, the micro or the macroeconomic that drives. Let's say Dumpster, which, he happens to be a lazy guy. He's like, okay, well, I'll take the unemployment 3 times the paycheck and I'll be at home. If you're at home, you're not driving. If you're not driving, you're not buying gas. If you're not going out to eat, well, you probably have too much disposable income to buy stupid shit, and you don't care what price it is because you're not spending on gas, on your lunch, on food, everything that's related to you going to work, right? So at one point, people had a lot more disposable income for stupid shit. So people will ask any price, and you'll be like, okay, yeah, I got extra money. I got triple check now from unemployment, right? So I'll just buy those shoes at 500. Well, now that all of these things are drying up and the cash is getting low in the retail, right, in terms of money, well, what do you think the retail has to start doing in Q3? They have to start getting a fucking job. They have
Get
to
a job, exactly.
So this cycle does not stop sometimes till October, mid-October. This is, Shorty economics, I would expect that we're going to get a bounce and kind of like a little bit higher demand and from stuff and inflation down in Q3, like end of October, beginning of November. And just look around, look at airlines. I mean, there's no pilots. Delta canceled 500 flights last week. And everything's kind of telling you what is happening. It's just that people are ignoring it, right? Because they're listening to the stuff they should not be paying attention to. It's almost like those SAT questions. If you took an SAT, there's a bunch of fucking text, but only one number matters. And people are focused on bunch of fucking text, but they're not seeing the message they're giving them. And that's the same as stock market. They give you a bunch of shit, and people focus on the wrong things, and they make you buy at the wrong time, sell at the wrong time, and do the opposite, and then they profit off of you. So that's why POCs, volume profile, is basically your economics of the trading, and why is it so important to understand it. Okay. All right. Well, hopefully this was helpful, guys. And just rewatch it. I'll send you the PowerPoint. Apply it. Look at it. Even if you don't trade on Monday, just look at it. Look what you would do and mark your levels. I would have done this at this level. I would have done this at this level, and see how it works. And then eventually, once you write it down and it becomes 10 times green on your journal, even if you didn't take the trade, the 11th time you take it, it's going to be green. I guarantee you, it's going to be green.
Sorry, really quick, Shorty.
Yep.
You said 9:30 for watch list tonight.
Yeah, I'll do 9:30 tonight. See if we can get a good couple of tickers in.
Right on.
Thanks a
Alrighty,
lot.
guys.
Appreciate
Thank
you
you, guys. Have a good one. Bye.